Hey everyone and welcome back. Today's video is going to be a full breakdown and analysis of Thor Industries' full year earnings for the year of 2020. And yes, you might be wondering, how can this company be releasing their 2020 earnings already? And it is just a matter of fact that Thor is one of those weird companies that decides to end their financial year at the end of July instead of at the end of December like everybody else. But anyhow, Thor Industries is the biggest position in my personal portfolio, as you would know if you've been following the channel for a while. So naturally, whenever they release any kind of quarterly or annual report or any other announcement, I'm going to be covering them on the channel. And even if you're not invested in Thor Industries, which I would probably say is the vast majority of people watching this video, me going through and breaking down and analyzing the earnings report for Thor Industries can help you understand what I'm focusing on, what I'm looking for, how I'm analyzing certain numbers, and how I'm approaching the analysis in the year and then relating it to the life of Thor Industries as a business. And then you can apply that process to any business that you're analyzing. Because at the end of the day, what I want you to get out of these videos is not strictly an analysis of Thor Industries, but how you can approach analysis so that you can apply it to businesses that you want to invest in, which for the most part are going to be businesses that are different from the ones that are in my personal portfolio. If you are one of the few people out there who are invested in Thor Industries or are planning on investing in Thor Industries, you can use today's video as a complement to your own research, but please do not use it as a replacement. You need to do your own research if you're going to be investing in Thor Industries or any other company for that matter. If you do enjoy today's video and get some value out of it, then I would very much appreciate it if you could take the few seconds it takes to leave a like on the video and let me know your thoughts down in the comment section below. What do you think about Thor Industries and their results? Or if you have any questions about analysis in general, I'll be down there answering questions as this video goes live. So the first thing that I always look at when a quarterly or annual report comes out for a company I'm invested in is I'm looking at their core growth in their core four numbers. So these numbers are their sales or revenue, earnings per share, equity, and cash flow for owners, or free cash flow if you don't know how to calculate cash flow for owners. And when I'm looking at these four core numbers, I'm looking for a couple of things. First, I'm looking for these numbers to be growing consistently over time. And ideally, I'm looking for these numbers to be growing at a rate of 10% or higher. So I'm typically targeting businesses with growth of more than 10% per year on average over time. But barring that, I'm looking for businesses with at least very consistent numbers over time. But with that said, business performance is never perfect. It's never in a straight line and it never just continuously goes up. There are going to be fluctuations in any given quarter or year. So when you're looking at these numbers, if their growth is not the exact same as their historical 10-year growth or their growth from the past 5 years, don't freak out. That's obviously to be expected. But what we want to do is understand why their growth was different to their typical growth in the past or their average growth in the past. Understanding why, what were the forces that drove that, and whether we should expect these forces to continue in the future. Now, last night, Thor Industries released their fourth quarter earnings, their quarterly earnings, and then of course their annual earnings. I'm just going to focus on their annual earnings because looking at a single quarter doesn't really tell us that much about a business anyway. Even a single year can sometimes not be a very good representation of the business's performance, but certainly a quarter is not. So I'm going to be focusing on Thor Industries' annual numbers and comparing that to their annual numbers from 2019. The first number that I look at is, of course, revenue, and revenue for Thor Industries in 2020 came in at $8.2 billion, which was up 3.9% year over year. Now, this is the second highest amount of revenue that Thor Industries has produced in a single year in their history, and that's only second to their 2018 numbers, which were $8.3 billion. So basically they were in line or slightly below their all-time high revenue, which was a huge surprise to me, and I think was probably a surprise to many people, considering that in March and April, for almost 2 months, their factories were completely shut down. They were not making any RVs at all for 2 months of this year. And then, I expected that around those 2 months, even after they opened their factories, I expected that RV orders would be down substantially. That as people had lost their jobs, many people in the US, I was expecting that there would be less orders for RVs at the dealership level, and therefore there would be less dealerships ordering from manufacturers like Thor Industries. However, there was a couple of key reasons why they were able to almost beat their all-time high revenue numbers. The first was that they now had a full 12 months of their European business included in their revenue figures. So in 2019, only 6 months of the Erwin-Heimer business, which is a recent acquisition, only 6 months of that was included in those numbers, and now 12 months was included. So that obviously contributed to an increase in 2020 over 2019. And the second and probably most exciting reason for me as an investor is that demand at the retail level in the fourth quarter was extremely high. And the way that we can have a look at this at an industry level in the US is heading over to a website called rvia.org. And this website basically provides RV data for the US market at the retail level. And it is in that data that we can see that there is a substantial increase in demand over the past few months. As you can see, 2020 did start the year better than 2019 by a little bit, but then in March and April, that dropped off substantially. And after their factories were reopened after April, I did expect that their demand would increase slightly, but I thought that it would still be lower than their 2019 levels. However, you can see that there are many months now, very recently, where the demand has been even higher than 2019. And one thing to note that you're seeing there is that the July 2020 numbers were the highest levels in 40 years of the RVIA. The next number that we can take a look at is the earnings per share, EPS, and EPS came in at $4.02, which was down 37% year over year. And this was mostly due to GS&A expenses, general selling and administrative expenses, and these mostly came from their European business. So naturally, as they acquired this new European business, they now have a substantial increase in general selling and administrative expenses for that business. And essentially what happened is the US part of their business are still seeing sales that are lower than, say, their 2018 levels where they had comparable revenue. And as a result, they have an increase in selling, general and administrative expenses, but still have lower levels of sales than they did in previous years. And as a result, their profit margins are smaller. And that is why their earnings on a per share basis was down, even though their revenue was an increase. But as we've been seeing over the past few months, the US market is improving substantially. And as I'll discuss in a little bit, that's expected to continue into 2021 and of course over the long term. And as the US part of their business improves and returns to normal, I would expect that their profit margins will increase over that time because that is historically what has happened to their business. The next figure that we look at is equity or shareholder equity, and this figure came in at $2.4 billion, and this was up 12% year over year. 12% growth is terrific, and this was mostly due to the fact that Thor Industries produced a huge amount of cash during 2020, which we will discuss in just a second. But essentially, they took the huge amount of cash that they generated and they used some to bolster their balance sheet, keep some as cash on the balance sheet, and then also pay down some debts. And both keeping money as cash on the balance sheet as well as paying down debts, both of those two things improve the equity within the business. And the final core number that I like to look at is the cash flow for owners figure. And if you're wondering how to calculate that figure, there is a video on my channel that you can check out. I'll leave it linked down in the description below. But essentially, this figure is very, very similar to free cash flow. And in 2020, this figure came in at $485 million, which was up 8% year over year. This cash flow for owners figure is the highest in Thor Industries Industries history. So while their earnings on paper on the income statement were down, in terms of actual cash flows, cash coming in and out of the business, this was up again and continued to be an all-time high. And the reason why there is a discrepancy between the paper profit on the income statement and the actual cash in and outflows of the business is really due to one figure in this circumstance, and that is depreciation. The income statement includes non-real expenses, non-cash expenses such as depreciation or amortization, which are supposed to represent the loss of value of assets that the company owns. So depreciation being the loss of value of physical assets, and amortization being the loss of value of intangible assets, such as the brand value of a certain RV brand, for example. But the key thing to realize is these depreciation expenses are not actually cash going out of the business, right? When an asset depreciates on Thor Industries' balance sheet, Thor Industries doesn't actually have to pay any cash, right? They only pay cash when they actually maintain those assets, when they actually spend money on those assets. And the good thing is that Thor Industries' management team tells us how much money they actually spent, how much cash they actually spent on maintaining assets. So we can compare these two between how much is on the expense on paper and how much was actually spent by the business. And we can do this by looking at the maintenance capital expenditures which are described in the annual report. And for Thor Industries, these maintenance capex figures were about $50 million in 2020. And that compares to the depreciation and amortization expenses of $220 million during the period. And at the end of the day, the reason why I like to look at cash flow for owners is because it is that actual cash figure that can actually be used to pay shareholders, to deliver cash into my bank account as a dividend, or to repurchase stock, or to spend that money to expand their business. They can't spend earnings per share. They can't spend a paper amount of profit or loss. They can only spend the real cash that is coming in to their bank accounts. And that is what cash flow for owners represents. And in this case for Thor Industries, their profit figure looks down, but in real cash terms, they have produced more cash than they have in any other year of Thor Industries history. After taking a look at those four key numbers, the next thing that I usually take a look at is the debt numbers within the company. And I'm usually looking to make sure that these debt numbers are still low, because whenever I'm investing in a company, I'm looking for companies with low debt relative to their equity and their other assets on their balance sheet. But in Thor Industries' case, I'm looking to see if this number is going down over time. And the reason why is because when I started investing in Thor Industries, they had no debt. So their debt numbers were perfect. They were exactly what I like to see. But then soon after that, they made a huge acquisition, the biggest acquisition in their history. And in order to do that, they took on a substantial amount of debt. So as an investor, I wanted to make sure that the management team had a focus on paying down this debt and reducing the risk to shareholders immediately, as soon as possible. So that's been the story for Thor Industries over the past 18 to 24 months. Is I've been looking at their debt numbers very closely and making sure that they are consistently improving to get back to levels where I am satisfied. So there's two key debt ratios that I like to look at. The first is debt to equity, and this for Thor Industries at the moment is 1.46. Now this is higher than I like to see. In the best case scenario, I want to see this below 0.5, but typically I'm happy with anything that's below 1. But of course, 1.46 is still above 1. But what I'm really looking for here in this case with Thor Industries is I'm looking for this number to be going down over time. So if we compare that 1.46 debt to equity ratio to their debt to equity ratio in 2019, it's down from 1.7. So in only 12 months, it's gone from 1.7 to 1.46. So it's definitely trending down over time. And as the business produces more and more cash flow in each additional year going forward, I would expect that the rate at which that goes down should also increase. So I'm actually very happy with how their long-term debt situation is currently. And then the other debt ratio that I look at is the current ratio, which is currently at about 1.4, which is pretty okay. In the best case scenario, I want to see this above 2, but as long as it's above 1, and it's pretty substantially above 1, I'm very, very happy that they are okay in terms of their short-term assets and their short-term debt obligations. And then the final thing that I do when it comes to an annual report is I take a look at my discounted cash flow models, my models projecting their cash flows going forward, and see if my past models, if their cash flows, I should say, were in line with my models that I made over the last year. And then I will decide whether I need to make any adjustments, whether I think the business has changed in any substantial way that requires me to lower or increase the growth rates that I have in those models. Now, as I mentioned earlier, the cash flow for owners figure in 2020 was $485 million. And if we take a look at my models from last year, you can see that I expected that next year's or 2020's cash flow for owners figure would be somewhere between 450 million and 495 million. So as you can see, the amount of cash flow for owners that they produced in 2020 is in line with my models and is actually in line with model 4 almost exactly. So in other words, Thor Industries as a business is performing in the upper range of my expectations. And the one thing that we need to recognize is that this isn't always going to be the case. This is a pretty neat outcome for me where my expectation was right in line and actually at the top end of my range. But over time, from year to year, this is going to fluctuate, right? Especially in the environment that we're in right now, you should expect that your businesses are probably going to underperform your expectations from last year. So in other words, last year, if you're looking forward, you probably projected that your business would grow, and it's very likely that they did not grow. That's going to be the case for most businesses. But ultimately, the lesson here is if you make safe and reasonable models, so my models are very, very reasonable to the point that even in the current environment that we're in, the business is performing at the top end of my models. So if you have very reasonable models and you allow for a margin of safety, then you can be very confident in using those models in order to invest and be confident that you can make an above average return over the long term. So that's all for today's video, guys. I hope you enjoyed it. And as I said at the beginning, if you did enjoy it, I would very, very much appreciate it if you could take the 2 seconds to leave a like on the video and let me know your thoughts down in the comment section below. I'll be answering questions and responding to comments down there as this video goes live. But other than that, I hope you guys have a great day and I'll see you in the next one.